And so truthfully, I do believe they will pause, because I believe they'll pause and wait because we'll start to get some more data. And I think they'll start to see it really starting to slow to an indicator that they like. Welcome to the Cash Flow Chronicles. I'm your host, Jonny Catani, and the founder of Catani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys? Happy Friday. Welcome to another episode of Friday Follow-Up here on the Cash Flow Chronicles. I'm your host, Jonny Catani, and congratulations. We have made it through yet another week. Very exciting stuff happening. A lot to get to. Not all of it on this episode, though. But of course, you guys, if you're a new listener, welcome. Grateful to have you. If you have not yet, go to thecashflowchronicles.com, fill out the quick little sheet at the bottom there, and sign up for my list. We have some awesome things coming, including, of course, as I've been teasing for a few months now, the 5-part series for new investors. So especially if you're a new investor, which I know some of you are, not all of you. So this only applies to new investors. If you're a new investor, go to thecashflowchronicles.com, same name as the podcast, and sign up. This will be a 5-part series for new investors. I'm very excited about it. I filmed the most exciting part today, which is actually part 1. I'm kind of filmed out of order. The one I filmed today is my favorite part, which is part 1. So I'm excited for that. But you guys will have to subscribe to the list to get access to that. I'm not going to tell you what it is. Okay, so on Wednesday, we talked about diversification, which was huge, right? So today, if you're diversified, if you're not diversified or you want to learn about diversification, go listen to Wednesday's episode. Super awesome episode that I did on diversification, really breaking it down, defining it, helping you guys really understand what diversification is and why it's so important, right? And that includes, I talked about things outside of real estate, talked about the stock market. So go listen to that episode. Today, we're just going to touch, again, I'm keeping you guys up to date on the debt ceiling. Still no leeway. Not much has really changed. Treasury Secretary Yellen is basically, putting the warning labels all over this, but she's been warning about this for a few months. McCarthy won't budge. Really, you guys, the biggest thing here, and I think I mentioned this on Wednesday too, it just comes down to spending less than we're making. We've got to spend less money than last year. And that's McCarthy's big thing is he wants us to spend less than last year. And the Democrats just love to spend. And it's not to say that all government doesn't love to spend. I'm not trying to point the finger, but I am pointing a little bit because, especially in this case, the Democrats aren't budging on certain areas where they really should be, and we really should be making cutbacks. And so that's a big thing there. Super, super important, that we spend less than we're making, guys. If you think of the country as a business, right now it's a failing business, right? We're spending way more than we're making. We're having to borrow. And say for a second, your expertise is turning around failing businesses. Okay, so you go and you take over the US LLC, United States of America LLC, and you get into the P&L, profit and loss, and start looking at all the books, and you see that we're spending way more than we're making, and in order to cover it, we just go and borrow more and sell more debt. You would be like, okay, well, it's pretty clear what your issue is here, right? And the first way to turn this around is we need to figure out a way to spend less. So you start making cuts. And now, certainly, I'm not going to get political here because I'm not going to get into like where we should cut spending and where we shouldn't. I am going to just make this one anecdote. We are spending $800 billion on our military. So, that could be a cutback potentially. It's not to say that you cut back on salaries, right? This is more like R&D, government contracts. You guys, I don't know if you've looked into government spending on government contracts, but when some of these privatized companies that are getting these government contracts, they're charging the government 1,000 times more than they would charge someone like you or I to buy even just the most mundane things. So, that could certainly be a point of emphasis, but I don't want to get super deep into it. I just told you guys that I would continue to update you on this, and that's the update. There's not really much of an update. McCarthy is making it. McCarthy, I did watch an interview with him today, and he said he's like, we're not going to go into default. So clearly, somewhere someone's going to have to budge. Where that is, that remains to be seen. So we shall certainly, of course, keep you guys updated. I check it every day, and you guys should too. It's very important to keep up with this stuff because it all ties into what we're trying to accomplish, which of course is investing, and it's important. So the next update that I'm going to give is on the interest rate, overnight rate, the Fed rate. So the Fed will meet in, I believe, a week or 10 days. I believe it's not next Wednesday. It's the Wednesday following, because next Wednesday is the 31st. They will meet, I believe, the first. Let's go ahead and look that up. But I believe it's the first January, the first week of June. Nailed it. Let's see. This next meeting will be on June 13th and 14th. Okay, so I stand corrected. It'll actually be 3 weeks. So 2 weeks from this coming Wednesday, they will meet. So the biggest thing that is coming out of the Fed is they are divided on whether or not to pause in June. So obviously they lifted rates. We're at anywhere from 5 to 5.25% for the Fed overnight rate. Whether or not we pause is the next big thing. So they're not going to lower it yet, but the biggest question was, are they going to pause? And supposedly the economy is still not slowing down enough for them to pause, but they're literally breaking the banking system. I believe, and this is speculative, right? I'm a hobbyist economist. I believe that they should pause. I think that we need to let some of this data catch up. So real estate is about 40 to 50% of the CPI, and real estate has a 6-month lag. So the data that's coming out is from 6 months ago, which was at the beginning of January, when real estate still hadn't started slowing down yet. So it's just barely starting to slow down, and starting to slow down pretty exponentially depending on your market, right? Transaction volume is down, median home price is down. All of the indicators are slowing. And so truthfully, I do believe they will pause, because I believe they'll pause and wait because we'll start to get some more data. And I think they'll start to see it really starting to slow to an indicator that they like. Why these banks failing is not a good enough indication is beyond me. They really just are trying to just break everything. And the problem is all they care about is for things to slow down. It doesn't matter that banks are breaking. A report came out that most banks are insolvent currently. So by pausing, that would give some of these bond portfolios a break. And then ultimately, as interest rates start to come down, these bond portfolios start to level out. So in my personal opinion, I believe that it will pause, and I believe that's the correct answer as we await more information. So that's my 2 cents. That's a Friday follow-up for today. I just wanted to give an update on those 2 things. Of course, we'll keep you up to date as things come along. Of course, on Monday is another awesome interview. Let's see, who do we have coming up on Monday? I'm sure it is someone amazing. Monday is Brad Shepard. Oh my gosh, such a great episode, you guys. Stoked on that one. That was a really fun episode, and I know you guys will love it. So You guys, if you love this episode, if you love these episodes, please share these, like, subscribe, rate, review. I love getting reviews, but share these, you guys. Share with people who you think can benefit from this information. Obviously, if you love the experts, reach out to them too. Let them know. I make sure to get everyone's contact info at the end of every episode. So if you like them, reach out to them too, guys. That's why I have them on. It's to help them, right? Of course, we're shifting. The interviews are starting to slow down in terms of, so interviews will continue to come out through June. And I'm moving some stuff around because we're getting some real-time info. So I had some real-time conversations, economic conversations. So those will come out first, but those will taper off. And then July, August, you guys, we will have mostly me. Now, I am gone at the end of August. I'm gone for 10 days. I'll be in South Africa. So for all of those, I'll pre-record a little bit, but I'm not going to do 2 weeks of pre-recording. So I'm probably going to blast out a bunch of interviews. So anyway, we're going to be tailoring to all solo episodes. So I'm really, really excited for that, and gotten a lot of great feedback there. So again, like, subscribe, rate, review, thecashflowchronicles.com. That's where you get on the list. If you're a new passive investor, the 5-part video series will be coming out very soon. Very excited for that. It will be coming out in the next month, actually. I know that for a fact. So very excited. So thank you guys so much for listening. As always, have a great weekend. Oh my gosh, it's a holiday weekend. Oh, that's right. It's a holiday weekend. I'm sure you guys have amazing plans. So obviously an interview is still coming out. I will not be working on Monday. So I have got some big plans this weekend. A lot of awesome things happening in the city. I'm sure you guys are doing fun things as well, getting out the family, barbecuing. Don't forget, you guys, it's Memorial Day. Thank a veteran. Thank them for their service. If it wasn't for them, I wouldn't be able to sit up here with all these freedoms. I wouldn't be able to even criticize our government if it wasn't for them, right? Keeping this democracy and, defending our freedoms, which of course one is freedom of speech. So thank you guys so much as always for listening. I will talk to you next Wednesday. Have a great weekend. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to KataniCapitalGroup.com to learn more.